Hey everybody, today is Wednesday, the second of the third month, second day of March 2011. Let's go ahead and take a look at this market. The S&P 500 closed with a 20-cent gain today. All the markets were up, actually, except the financials that I normally look at here. Audio and video are good. So. The S&P 500, this morning I tweeted that I thought that there was a good chance that we were going to see a test of not only last week's lows, but the 50-day moving average. Now, what we had happen actually was a pretty darn choppy day. We started out with just a little bit of weakness, but the market quickly got back above that volume-weighted average price, held above it, and then it got up to this level, which was 132.75 to 85 is what I was referencing, and that you can see here was today's pivot level as well as the 2-day volume weighted average price. And the 2-day volume weighted average price isn't something I look at every single day, but it's something that I look at when I think it's important. And it becomes important after a big event day like we saw on Tuesday. So what we were looking at that point was what's the average price of the last 2 days since we had this big sell-off. And obviously that was an area where we had, well, actually three things coming together. We had the pivot in there, we had the average price of the last 2 days, and it was also where we saw that 5-day moving average right here. So we're looking at 10 minutes worth of data, or I'm sorry, 10-minute candles here. And you can see it's just a pretty choppy day. So earlier in the week, of course, we had broken, let's back up to Tuesday. We broke below the important support level of 132.40, and that's when this bigger sell-off materialized yesterday. It looked like we might be able to experience some panic lower. It's still kind of sketchy here, I think. I don't think that we have really good intermediate term direction. You can see we've got this 5-day moving average is flattened out. We're just kind of chopping around underneath it, and on the daily time frame, looks like maybe we're more in a neutral type of environment here as far as the intermediate term. Obviously, we're still within a much larger uptrend. Even just drawing this trend line, you can see held from the where this move began, and I think that I would still like to see at least a test of those lows and perhaps even an undercut. But we've got basically, I think, a mixed message in here. I don't think it's time to call any tops, but at the same time, the average stock isn't going up as easily. And speaking of the average stock, it became apparent that the market wasn't going to break down today. And in my opinion, let me just finish that thought. It became apparent the market wasn't going to break down when the advanced decline briefly went negative here, but then stayed positive all day long, and we actually had 1,870 advancers and 1,114 declining stocks today. So the market, again, it's mixed here. You got to kind of just pick your spots and trade the stuff. Where my bias actually came from, here's my mistake in thinking today. I typically say, trade the market that you're trading. Don't look for these relationships that the market has to. For instance, this morning I got thrown off my game because I was paying attention to oil, and I was thinking, wow, with oil rallying like this was the catalyst for weakness the day before, that maybe now we're going to see this market sell off. I had come into the day with some short positions and held on to them stubbornly, but not too long before the damage was big. But the fact is, I talk about it all the time, that you don't want to look so much at those relationships that, hey, oil's going up so the market has to go down. Nothing has to happen. If you're going to trade the market, if you're going to trade the S&P 500, 9% of your attention should be focused on the price action of the S&P 500 alone, and you want to be aware, of course, of oil and world events and whatever, but the only thing that's going to pay you there when you're trading the S&P 500 is the price of the S&P 500, not the price of oil or anything else. So again, that's just, I wanted to point that out because I had kind of come in with a little bit too negative of a bias today, and we're really looking more neutral. Maybe this market's going to correct more through time than through price, and we are above a rising 50-day moving average. This 50-day moving average is held in the past, and as some people have pointed out, we have tested the 50-day moving average on the NASDAQ, and in the NASDAQ, the Qs, we have a slightly different picture here. We've got a rising 5-day moving average, and the market's chopping back and forth above and below that. I think that for the NASDAQ to get back to a more positive intermediate term bias here, that we're going to need to see this market probably get above 57.40 and hold above there, I'd say, for, I like to say for at least 30 minutes or so. If the market can get back above 54.70 and hold above it for about a half hour, you don't have to look for a close, because maybe it holds above there for a half hour, then it runs to 58 and closes at 58.15. You don't buy the close. That's a foolish strategy in my mind. You can monitor the price action, but who knows where it's going to close. We've also got this little downtrend line that kind of comes into play. So 57.40, 57.50 appears to be the level in here, and you could say we're making this big triangle as well. To me, it's very indecisive. And my mistake today was that I was trying to be decisive in an indecisive environment, and anyways, that's the way I traded it, which was incorrect. But this trend line also continues to hold. And again, why do we take a trend line from here versus the lows from September like we did in the S&P 500? Simply because we've already broken this trend line, and now where I'm drawing it from now, this is what represents the essence of trend. On the daily time frame, we're seeing that this 57.40 has been a bigger level in earlier in January as resistance, and now we're kind of having trouble in there once again. So and you also take a look at for instance, and we'll do this for the S&P 500, but if we take a look at what's the average participant, I saw something on TV today that the average portfolio manager is underperforming by X amount so much year to date, but what's the average, the volume weighted average price for the NASDAQ is actually right here. We're pretty much right on it at about 56.80, let's just call it 56.90. So what does that mean? It doesn't mean you sell short below it or you buy above it. We've referenced this line before in the past, and you can see it's a dynamically drawn line. But what it says is, here's maybe the psychology of the average participant out there, whether they're in a winning position or a losing position, and as measured from January 1, which isn't an arbitrary benchmark, because a lot of people's performance, depends on January 1st, but it's obviously just another date on the calendar. And here's the volume weighted average price year to date for the S&P 500. Now, if we take a look at the volume weighted average price since the bounce from the 50-day moving average, that's kind of interesting too, because if we were to break down below the 50-day moving average and continue lower, the next target, just traditional support and resistance, would be those Egypt lows right in here, down at about 127.5, and that's approximately the volume weighted average price since this move began. So kind of geeky technical analysis stuff, doesn't really help us make money here in the moment, just like looking at a MACD or stochastic, but it is a piece of information I think that's a little bit more important than a MACD or stochastic, because it tells us basically the psychology of the average participant and how they might be positioned on balance compared to the market itself. So I see the market selling off a little bit here after the close too. I don't know what that is, but we're down at 130.99. So we're down here. Not a big deal. But let's take a look also at the semiconductors. They caught an upgrade today, and this group was looking like perhaps it was going to continue a little bit lower. It was below that 5-day moving average. They gapped up though and really just squeezed the shorts in here, I think, is what happened. It came up to this prior, where we've seen, the trouble begin. Now, you could look at this thing. It's easy to imagine certain formations and that sort of thing. You could look at this and say, well, was this a cup and handle? Now is it an ascending triangle here on this shorter term time frame? So we have to back it up and kind of frame it and say, we're still, in this area where the market's been damaged, and it's going to need to clear up through this level before it can, I think, obviously go on to new highs. But we do have on the daily time frame this massive uptrend. We've got that 10-day moving average cross below the 20, and I think it's indicating that we're not going to push out to new highs. Now, I wouldn't bet against it, or I wouldn't bet for it here. To me, it looks more indecisiveness again, and this is just simply not the environment to press your bets and to try and push up against the market and imagine different scenarios such as an ascending triangle or cup and handle or whatever. Instead, you back it up and say, we've had this huge rally in these semiconductors. It's kind of suspicious they're getting an upgrade way up here, but hey, whatever. I mean, it worked, and the path of least resistance was higher today. I think that the moving averages crossing say we're going to need some time consolidation. I wouldn't be surprised if we drifted lower and the 50-day moving average caught up to this market. It's not looking like a breakdown market. Neither is the financials. The financials close below the 50-day moving average, and that gets a lot of people's attention. But what's more important than a close above or below is what's the direction of the 50-day moving average. And if we're still, if the direction of the 50-day moving average is still higher, like it is in the financials, and we're still holding above bigger levels of support, then you generally give the benefit of the doubt to the buyers. It doesn't mean there aren't good short sale day trades in there and that sort of thing, but we've got this bigger level of support at 1620. If 1620 is broken and the market holds below that, then we could see these financials maybe unravel a little bit. But overall, we're getting just some needed correction. Price and time wise. The IYR had broken out on Monday and then came in and reversed very hard yesterday. So this group probably is going to need to settle down in near about that 58 level, I think. Gold has obviously been on fire. As we've been following that here on Wednesdays and Fridays, talking about how silver was really kind of leading the way, that silver had broken that 50-day moving average, was making the new highs, and it wouldn't be surprising to see gold catch up to it and kind of follow the lead that the silver had given it. And here we saw yesterday that the market did break out to a new high. The other thing on this GLD trade was, we've seen these two moves that are very similar looking. It broke a bigger level of support. From that failed move came this move higher, got above the 50-day moving average. We kind of hit these tops and then ran out to new highs. So we had this break lower, this rally up. Now maybe we get a break to the new high. Now maybe we pull back again, and then the next move begins higher. But gold is obviously still in a giant uptrend. You look at the weekly chart. It's in a massive uptrend, and the question is, do you chase it up here after the move from 127 up to 139? I don't think it is. We've been talking about it bullishly for the last several weeks, and it holds above these. Here we see a rising 5, 10, 20 day moving average, and on down to all the shorter term time frames where it continues to look bullish. What I wanted to do today was talk about, once I got through those indexes, which I've done here, is on Sunday I had released a video that said here's some ideas for the week ahead, and those ideas, let's take a look at those right now. I'd spoken about ARUN and Aruba. It's in a big uptrend. It looked like maybe if it could get through some resistance, it could get going. Well, Monday morning, it started taking off quick, and what's the most important job for traders is to manage risk. I was saying that I liked the way this had a nice tight consolidation, but if it broke below that, then it's probably time to move to the side. Now, maybe it wouldn't have gotten out right there right away, but over here later in the day, it became apparent the pattern of lower highs and lower lows, and obviously we've continued to break down from there. So I don't look at Aruba favorably right now. I think it needs to heal further before it could continue to move higher. CDE was a gold stock I was talking about that looked like it had the potential to break out. And it unfortunately, what we were looking at in here was to buy it above this little resistance level. Well, what happened was it gapped up and then just ran super strong. So let's take a look at the 3-day chart. Realistically, someone on Twitter said, "Hey, nice call on Coeur d'Alene." I didn't trade the stock. Number one, I was sick and not really into it as much. But more importantly, you'll see people take credit for a trade like this, and you'll see them beating their chest all over the place on Twitter saying, "Hey, what did I tell you about CDE?" But the fact is, unless you were in the stock on Friday, to chase it after it had gapped up about more than $1 here, after it gapped up and showed no pullback initially, to chase it in that area, in my mind, is taking too much risk. So I don't think that it was a good risk reward to take the trade here. Now, in hindsight, obviously, I would have loved to own, have my whole account in it on the open that day. But normal trading would tell me that it's foolish to take that big of a bet early on. That the ideal scenario would have been a little bit of a pullback and then continue to move higher. And this, in my mind, would have been the ideal place to buy. Obviously, it didn't happen. I'm not going to take credit for it, but CXW was one that I said looked like a potential short sale candidate. It wasn't quite ready yet, and it's still not, but maybe below 24.35, CXW would be one to continue to keep on your watch list for a breakdown. It really looks like maybe it's in a bigger range, but I think that a test of that 200-day moving average down near 23 could occur, and if you were to short it below 24.35, worst case stop maybe about 50 cents away, up at about 24.85. Dell was a good one. It was certainly tradable. I traded it, and we were talking about buying it above this 15.29 level. It had a good day on Monday, and then it broke down hard Tuesday. And for me, I was actually out on Monday, out of the stock after I bought it, but. Now it's holding up. If you're in it, I'd say probably a stop below the low of the last 3 days would be about as much risk as you should take. EMKR was one of the only solars that I really liked, and this one was strong and buyable Monday morning, and it's been making this pattern of higher highs and higher lows. We have a lower high this afternoon, and if it breaks back below 272, then I would think that it's probably going to drop back down. So I would say a stop would go in that area. GSIC was a potential short trade candidate. We were talking about this little consolidation in here, this little bearish flag, and how the weekly and daily chart were all pointing lower. Well, the stock broke that support level that we were talking about at 2045 yesterday, and this was tradable. It was a nice move lower. I'd say worst case stop if you're in it, probably just above $20 a share. One that I was talking about that I kind of actually regretted mentioning because it wasn't, and I said this, it wasn't the ideal scenario and not the type of stock that I normally trade, was JRCC. But I said, the way it's been holding up, if it can get above this resistance at this 2185-ish or whatever it is, that perhaps it could bounce. Well, I suppose I shouldn't regret talking about it because it didn't give us any reason to purchase the stock. It was weak right away on Monday. It gapped up a little bit, but it never breached the resistance and never gave us a reason to buy. So I wouldn't be watching that one. NSIT, this one continues to hold up pretty good. It hasn't given us a good reason to buy yet. I mean, it gapped up, but I think it holds up pretty well, and probably if it can get back up above the highs of the last 2.5 days at about 1840, it would probably be buyable with a stop just underneath these higher lows. PLT was a potential short sale candidate that it got going a little bit yesterday, and here I think that, again, here's another one that maybe it gets down to the 200-day moving average, but really choppy trading yesterday. I was watching it a little bit and basically stopped watching because it's just too choppy. It just trades, nickels and dimes. LZB was a potential long candidate, and here's a good example of why we don't buy pullbacks. What we do is we monitor pullbacks, so we don't buy a pullback to the rising 10-day moving average. We monitor that pullback and say, on the shorter term time frame, here's Monday, is that we've still got this declining 5-day moving average. But what we wanted to see was that the scenario I was building on the weekend video was something like, maybe we could do something like this, clear back above that 5-day moving average, and then begin this. In the 5-day moving average, we kind of take this type of look to it. But it didn't give us. It never gave us any upward momentum to buy. There was no strength to buy. So we've got this pattern of lower highs and lower lows below the declining 5-day moving average. If this one can recover over the next couple of days, get back above this prior support, which is now resistance at the 5-day moving average, then maybe this stock could continue to move higher, but it's probably a day or two away. Right now I'd say a pullback and then a push. Well, it could be even tomorrow. Maybe a pullback down to about 970, 965, and then a push up through that 5-day moving average in this prior support in here. So a pullback and then a push up through 985 would be the ideal way to buy it, and then a stop probably down near about 935 would be the worst case, I would think. I'd also mention XTXI, which is cross timber, and here's another one that gapped up, and what are you going to do with it, right? You can't chase it up in there. I was actually hoping it would pull back a little bit, then go, but it gapped up. It did show a nice little consolidation. This was buyable in here. Let's take a look at that, how it acted. This was buyable as it made this new high here on Monday, but it's been a pretty thinly traded stock too, and today, and I probably should have noticed that over the weekend, it only trades 367,000 shares on average over the last 20 days, so that might not be the ideal scenario. But some of these energy companies obviously have been going bananas. You've got ROYL that just has had this massive run, and it is I think tormenting shorts. BDCO started trying to catch up to it here today. That's something we had talked about last night for subscribers, but the other one I wanted to mention too was I had mentioned this VTG. This VTG still not ready yet, but I think you get it above the highs of the last 3 days. That's going to trigger a bigger breakout past $2.26. It's got this nice looking longer term chart, and Vantage Drilling. It's oil. It's drilling, and seems like the right place at the right time. You're going to get that 20-day moving average up to the 50-day tomorrow, and the stock looks good technically, but you've got to wait for strength to be a buyer of it. You can see it's kind of flatlined, and probably going to need a move above about 214, 215 before it could really get going. So, like I said at the beginning, or I think I said at the beginning, I'm not feeling 100% here, so I'm going to stop right now. Thanks for tuning in. We'll do it again on Friday. Hope you have a good trading week.